Hi guys, welcome back to the channel. Hope everybody's doing good. This video here will be going over my February 2022 portfolio in regards to how it's performing and in overall value terms, the dividends received, and also what I've been doing in regards to buying and selling stocks. So this first chart here, I'm going to be doing this just over the course of the year, showing each month and where the value of the portfolio is sitting. So we are down slightly. We're at £87,397 currently in February, down from 88,000 from the start of the year. Of course, that is only 1 month looking at it, but in the grand scheme of things, I've got this overall chart here where we've looked through the different years and the different quarters, colour coded for each year. Starting back off in Q3 2018 at 5,000, now we're away up at 87,000 odd. So really pleasing to see this progress over time. And one of the things that we can clearly see is that since Q2 21, the portfolio hasn't really been doing too much. I don't know if that's a good thing or a bad thing, as it's stayed kind of flat, even though as the markets went up quite a lot, and it's also came crashing down. My portfolio seems to be balanced out, that it's had an even keel over the course of this time. So how am I sitting asset allocation wise? Well, I'm still heavily weighted towards international shares, which makes up about 43% of the portfolio. UK shares are coming in at 29.8%. Cash is up at 11.7%, so this is up quite dramatically, and I have been selling a few positions, rightly or wrongly, just to raise some funds that I've got available should there be any further downturns, and buy more stocks and positions I've already got. I'm not really looking to add any new positions, but I would love to add some funds to existing positions that I've got. We've got 8.6 within the property, so this is going to be more towards REITs, also sort of classed under the international shares section. We've got a 4.8% in other as well as funds, and this is some of the subcategories where it hasn't identified what it falls under. Equity sector allocation, still pretty heavyweight technology. This makes up about 20% of the portfolio, weighted by consumer staples next, financials, real estate, healthcare and consumer discretionary. Breaking this down by market capitalisation, still heavily weighted towards large companies. 32.9% of the portfolio has a market cap of over 50 billion. 7.9% between 20 and 50 billion, and you can see the rest of the numbers there. I still got a good exposure to large caps and as well as small caps and everything in between. Dividends, so how are we doing on the income side of things? Well, in February 2022, I managed to bring in £178.60, and this came in through 5 payments. We had Vodafone come through on the 4th of February with £100, British American Tobacco at £40.43, Apple with £2.74, Energy Transfer with £18.36, and the first payment received from Citigroup at £16.61. And comparing this to 2021, where I only received 4 payments, I did manage to get overall improvement of about £7 year over year, and we've also liquidated some of the positions over that year. AT&T and Welltower are now no longer in the portfolio. Comparing the chart from 2022 to 2021, it started off at the same sort of theme, with January being a larger month than February's income, and we'll see over time. I really expect in June onwards for the rest of the year, I think my dividend income will really start to pick up quite nicely for a few different reasons. One, I've got a lot more exposure to UK stocks than I did last year, and these predominantly pay out over the summer months. Alongside, I do have that bit of cash there that I will be looking to deploy into dividend related stocks, again further enhancing my dividend income over the rest of the year. I'll never get bored of looking at this chart, as this really documents the entire journey so far. But February, this month, was the highest February payment I've received over the last 2 years, where it was from £150 in 2020 to £171 last year and £178 this year. February was a hugely volatile month, mainly due to the Russian invasion of Ukraine, and I am human, I do have emotions. When I see the money going up and down, it does affect me. I'm trying to get better at identifying that, but I did make some movements, some for the greater good, but some I think, I'm looking at Raytheon, I did sell that, probably should have sold that, but I did do this to raise some cash, which is why I'm sitting on about 11% cash at the moment, looking to deploy further capital. But we'll run through each of these positions on what I've been buying and selling this month. So Superdry, where did I begin with Superdry? Superdry was one of the companies that I first invested in back in July 2018. This is when I first started investing. I didn't have a clue what I was doing. This company just rang a bell. Yep, heard of Superdry before, I understand what they're doing, but I didn't look into any of the fundamentals or how they were performing, what's the growth expected, and ultimately I paid the price on this one. I bought into it in 2 occasions, as I thought I was understanding the whole concept of investing. If it goes down, you buy the stock again. But in this instance, I really bit off more than I could chew, and it was a lesson learned. where I've lost a bit of money on this. But there is one thing that I want to say, and it's a positive mention. That dividend payment at the bottom of £18.40. Now, it's not a lot of money, but it is indeed life-changing. It was life-changing for me because this was the very first dividend payment that I ever received, and it totally changed my investing outlook on what I was looking to achieve. I held on to this stock. I invested in 2 occasions. I picked up 84 shares at an investment amount of about £998 back in July 2018. And then 2 months later picked up another 84 shares at a similar sort of price. And only recently I did sell it because it's just going nowhere, in my opinion, and I'll need to take the loss on this one. So I did take a loss. We got a capital depreciation of £1,600. We did get £83 in dividends, but this gave me a total loss of £1,593.11, or 80% of the capital invested. So not proud of this one. A lesson to be learned here, that just because a company has a name that you know of doesn't mean you should be putting your money to it. Do your research, and yeah, we live and we learn with this one. Another stock that I sold, and I've got mixed emotions with this one. I've been buying into Airbnb over the last year. I love the company. The fundamentals are absolutely outstanding, but there is one area that concerns me. The valuation. It's sitting at close to 100 billion market cap, and the revenue isn't anywhere near that. I think it's about 6 to 8 billion. It's got a really premium market cap on it for the price to sales and the revenue that it's generating at the moment. And in this environment, do I want to hold this for the long term? I probably would want to, but right now I would just prefer to liquidate the position, take the small profit. I've been buying a stock on 3 separate occasions: 13 shares on the 23rd of February, 7 shares the 6th of May, the last 7 shares on the 12th of May as well. And the result that I've got here, it's nothing to rave home about, but we did get a capital appreciation of £261. It's only 8%, but because of the amount of capital I've got invested here, it's about over £3,000. I would rather move this to cash and look to deploy it into dividend related stocks. Third one I've sold here, and I probably got the decision wrong on this one. I probably sold it too early. I picked up Raytheon on the 14th of July 2020, 35 shares at a value of about £1,700, and we did sell it only recently, a couple of days ago, with a profit of a couple of £100. Really delighted, but it's the percentage gain and also the total dividends received from all these dividend payments that you can see at the bottom. Capital appreciation was £664, dividends are £64, which gives me total gains close to £730, which is about 42.6% of the capital invested. We've got Visor, a company that's been performing exceptionally well for me. I picked this up on the 2nd of March, investing about £1,800, buying 73 shares. I did get 3 dividend payments over the course of this time: £16.90, £17.42, £18.16, and these were all from the 73 shares purchased, but the variation is due to the currency fluctuations that you get when you hold foreign stocks. Overall results: capital appreciation £680.12, dividends £52.48, which gives me total gains on this stock here of £732.60, which is almost 41%. This rounds out the February overall, so from the super dry losses as well as the other ones, I've managed to tick out February just with a capital appreciation of about £130 of profit. And again, this isn't because I was looking to make a ton of money, it was just moving some money to cash. In terms of what I've been buying, I did buy more shares of Palantir. I did buy these before earnings, not on the basis that they were going to skyrocket, but I liked to look at the price at the time. Unfortunately, it did go down. I picked up 80 shares here at about $13.90, and this was for a value of about £820. But I did initiate one new position, and it's a US based REIT, Store Capital. Picked up 110 shares at a price of about $29.77, and this is an invested amount of about £2,458. And of course you can now see for yourself, exactly looking through the portfolio, how I'm sitting right now. So the value is up slightly. This is because it's live just now, the market is open. We do have the cash balance at £10,000, looking to deploy this into stocks that have maybe come down in price. But ticking through the stocks here one by one, we've got Alibaba still down massively, over 50%. We're quite heavily weighted in this one in regards to the amount invested in comparison to other stocks. We've got Alkaline Water now down 15%, Alphawave IP 34%, Altria Group being a real good performer here, up to 27%. Not really too sure when I would sell this or when I would look to sell this. Potentially if it gets up to towards 35% gain, I don't see a huge long-term benefit, and I do have exposure to British American tobacco, but yeah, who knows, I'll maybe take some profits there for Altria, but nonetheless still get a solid dividend coming through. Amgen is up 12%, Apple up 34%, BAE, of course, with the recent news with Ukraine and Russia conflict, we're up 50% due to being a shareholder in BAE, and that's one of the reasons why I had a little bit of comfort in selling Raytheon, is I've still got a bit of exposure here with a company that pays a solid dividend. It's not a huge amount in the portfolio, but right now it still is up 50%, which is nothing to be sniffed at. Boohoo Group is still down 31%. BP has had a bit of a roller coaster month due to its connections with Russia, and that's up 8% just now. British American Tobacco up 20%. Canopy Growth, that was about the same time as I invested in the Superdry. Learning curve for that one, down 88%. Possibly, I don't know what we're going to do with that. Maybe hold it for another year, see how we do. Citigroup is down close to 4%. Coupang is down 6.7%. Darktrace, this was down massively, like down 20 or 30% last month and the month before, but now it's at minus 5%. Earnings are due out Thursday, I'm sure, so we'll need to keep our eyes on this one and see how it responds. Energy Transfer down 35%. GAN down a whopping 60%. GlaxoSmithKline is down 3.7%, and this is the type of stocks that if this goes down like 5 to 10%, I would probably look to deploy a bit of the cash I've got into this sort of company, getting a good solid dividend on it, and it does have the spin-off, I think, is going to happen in July. Goodbody Health, UK-based cannabis stock. This gets painted with the same brush as Canopy. Greencore is pretty much break-even, as is Iomart. Medical Property Trust is up 4% just now. Merck is up 6%. Micron up 30%. We've got Money Supermarket also making a comeback. This was below £2 only a few weeks ago, and it's now up at £2.10, so we'll see where this one takes us. New Residential, hefty dividend payment, close to 10% on this, and this is about break even. Organon got this with the Merck spin-off. This is up 10. Only £8, right enough, as it's such a small position due to getting these shares free of charge with the demerger from Merck. We've got Palantir down 45%, bullish on the company, but we'll just need to see where the valuation takes us over time. Polar Capitals, bought this last month, down 13%, would love to add some more, we're getting a really tasty dividend on it. Shell is up 11%, SoFi down 32%, Store Capital, brand new position, we're sitting break even, has only been in the portfolio for a week. Tattoo Chef down 22%, almost 23%, Ventus down 10%, and Vodafone down nearly 5%, with Walgreens sitting still positive at almost 8%. This gives us right now, as we're down £13,000 or 14.57% of the capital invested here, which is about £91,000. But as we said, I do have this cash balance here on the sidelines, which I will be looking to deploy. Probably, you can't time the market, that would be naive to think that I could, but I'm probably looking to get more aggressive towards April time into summer and just kind of gradually feed this into the market. But that'll sum up this month's review, guys. If you found any value in this video, please drop it a like and subscribe to the channel, and feel free to leave a comment, and I'll catch you all in the next video. Thank you.